Welcome to the Treasury Update Podcast, coffee break sessions presented by Strategic Treasurer, covering foundational topics and core Treasury issues in about the same amount of time it takes you to drink your cup of coffee. I'll be your host, Jason Campbell, Business Development Leader at Strategic Treasurer. Joining me today is Paul Galloway, Senior Advisor at Strategic Treasurer. Paul, I'm excited again to have another opportunity to speak with you today about another great investing topic. How's it going out there?
It's going great. Thanks for having me again.
Yeah, absolutely. Every time again we do these episodes, I just continuously learn more and more, especially as I think in this time of age, and especially with so much uncertainty around, investing, whether it's, we talked about not just about, if you're in a company, but also talking about just being in retail as an individual. I think it's always great to, again, continuously find ways to ensure that, how do we maximize a little bit. Well, now this go around here, we're not going to so much talk about in the retail piece of it, as we're going to talk more into commercial paper and how that relates to investing. So let's get right into it. So let's talk to the audience about what is commercial paper.
Commercial paper is simply a short-term funding vehicle that's used by companies to fund operations typically. When I say short-term, they're typically, I think they can go out as far as 270 days, and they can be overnight. And what happens is a company works with paper dealers, typically a bank like Goldman Sachs, JP Morgan, and work with them to put together a program. You sell that to investors to raise cash on a short-term basis.
So why would someone invest in commercial paper? And I was thinking about this at the beginning. I was thinking like when we first talked about this particular topic, and I was thinking commercial paper. I'm like, well, it's not printer paper, right? So we're not talking about that kind of paper or copier paper, right? Why would someone invest into that?
Yeah, that's a great question. I really don't know the history of why it's called paper, other than used to be back in the day that bonds were physical notes, and you had coupons that you had to clip off the bonds. And I think paper came off that as a form of, we're going to call these shorter term issuances paper. Printed on paper, just like bonds were. It had a certain interest rate tied to it, a certain structure and duration, and I think that might be why it was called paper. But your typical investors, such as institutional investors or mutual funds or pension funds, even insurance companies, make investments in commercial paper to boost their short-term returns or yields, as well as to diversify the types of short-term investments they make in their short portfolios. And so it's a way for these investors to get better returns than using other short-term investment vehicles potentially, and also another way to diversify amongst the investments.
So are there different types of commercial paper to invest in?
Yeah, there is. So you can either get a unsecured note or unsecured paper, which is backed by the credit worthiness of the issuer. And a lot of paper will be rated by like S&P and Moody's. And so you'll hear people talk about either issuers or dealers, or the investors talk about investment grade. They'll talk about A1P1 or A2P2 or some combination of the two. What they're talking about is the rating of the paper, and that's done by the rating agencies. And so the program is rated by these agencies, and they'll look at, on an unsecured basis, they'll do a credit analysis. And then you can also get secured paper, which is backed by either assets or cash flows of the company. And again, your rating agencies will rate these. The other way paper can be issued is it can be issued based on a discount, or it can be interest bearing. And so when I say discount, let's say you buy $1 million of commercial paper, but that's the face value. So what that means is when that term of the paper matures, you'll get $1 million, but you don't pay $1 million for it. You pay, let's say, $990,000 for it over, a week period. So today you pay $990,000 to get that paper, and 5 days later, they pay you back $1 million. Well, the difference between the 990 and the million, that's the return or the discount that you get on that paper. Then likewise, let's say I buy 5-day paper, $1 million worth. I invest the $1 million in the paper, and I get yield or return on it based on what the agreed upon terms are. So I'll get $1 million plus interest.
When you get that return, you just got to weigh, is that percentage of the return on investment worth it? And I think from a short-term perspective side of things, you made a couple of interesting points around investing $990K to gain a $10K return on that $1 million. All those types of things right there, just it makes it rather interesting in weighing where is the risk, right? Because I think that all that's an upside to things. What are some of these risks that could be associated with investing in commercial paper?
Some of the most common risks I think about are credit, interest rate, duration, liquidity. These are all risks that come into play when you're making investments in commercial paper. I can go back to my days when I was working for an insurance company buying paper. We couldn't buy any paper that didn't have at least an A1 or P1 rating. And when, we were trying to change that. So I could buy paper that was rated A1, P2 or A2, P1, and that would qualify, right? So that means there's a difference in the rating buckets that the rate agencies put out there. I couldn't buy paper that was A2, P2. I wanted to be able to have an allocation to A2, P2 because that paper will offer a higher yield or a better discount, meaning I'll get better returns on the investment I make over a short-term period. And I couldn't do that because our investment guidelines wouldn't allow it. I worked with an analyst on our credit team to do an analysis and say, hey, what's it look like in terms of traditional default rates on A2, P2 paper? And what we found is that the variance in default rates between A1, P1 and A2, P2 really wasn't very big. Given the duration that we were looking at, we were buying paper that was only going out 14 days max. So it wasn't a real long duration. We felt like we could make an allocation and get better yields on our short-term portfolio by doing that. And so that's a proposal we put forward. So there's that credit risk. Then there's this idea of the interest rate risk, that if I buy shorter term paper and interest rates are rising, it could be better for me to be shorter. If I lock in longer duration, let's say I go out 3 months, 6 months on paper, and I lock in returns based on what's currently going on, the interest rates are rising over those next 3 to 6 months, well, I'm losing out on some reinvestment opportunity if I went shorter. Likewise, it could be the opposite case in a declining rate environment. So interest rates can have an impact on your return. I made some comments about duration in those two examples. So duration can have an impact. So I want to make sure that I have duration matched up with what my obligations are. We're talking about investments, but I'm making these investments on a short-term basis, and I do have short-term commitments, meaning I have liabilities or payments or cash flow going out the door. I run the risk both on duration and liquidity, meaning my ability to liquidate those positions or get the cash back so I can use it. I run some risk around liquidity and duration. So when I say liquidity risk, that means that, hey, I can't sell this to raise cash, or it's not maturing quick enough because the duration is too long. And sometimes, you can be put in a position that you might have to sell some paper because you don't have the ability other places to effectively raise cash or liquidity. So there are some risks associated with that.
Learning a lot about commercial paper during this episode and realizing it's not copy paper or printer paper, right? That someone can invest in it, the different types, and as well as some risk associated with investing in commercial paper. It's been great to chat with you. And for our listeners, please ensure to tune in every first and third Thursday of the month for a new episode of the Coffee Break Session. As usual, if you have any questions, comments, or feedback, please send us a note at podcast@strategictreasurer.com. Until next time, take care.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.